So the first thing we can recognize is, number one, that there's huge value in this. There is huge value, isn't there? Absolutely enormous value. The second thing we can notice is that there's a bit of pressure coming in from the dollar. So that's going to keep the price getting squeezed higher, isn't it? So we know that there's a bit of pressure to come in this. So the one thing we can't do is what? That comes back to that question. What's the one thing we can't do? We can't chase this market. We can't, for example, buy at higher prices. We can only buy at lower prices. Why? Because the short-term trade is against us. The short-term trade is bullish. As a result, I am a fader of this marketplace. So the only thing I can do is fade. I can't try and do anything else. I can't try and be smart about it. I can't try and do anything else with this trade. I can't do anything else. I've got to fade it or I just don't touch it. That being said, of course, we then get a new higher high print on this candle right here. And you can see if I drag that down into the dollar had just started to diverge beautifully at the right time. So we got a very short term. We've obviously got macro value in this in terms of the dollar. We've got macro value in terms of the real yields trade as well. So there is a trade here for me. There's a trade here for me. So what was the trade? Well, of course, the trade's dead easy to spot. The seller that came in here, if we now carry that line up into the charts, if we go up into the chart at that stage, you'll see that there is a spoof order. The selling coming in there, you'll be able to recognize that the seller is obviously still in control of the limit order book. Well, how did that happen? How is that possible? It's not possible, is it? It's fundamentally not possible to take that trade into that position, and yet it's there nonetheless. And you say, okay, so that kind of defies the laws of physics. The fact that there's no buyers and the fact that there's lots of sellers and yet the price doesn't go any lower, you think to yourself, okay, somebody's at it, somebody's buying this. And that gave us the ability to lean against that very easy buy trade right there, right off that 1799 print, and take the price up to obviously a high print eventually of 1805. So that gives you nearly 15 ticks worth of profit. And that's all you're doing is picking up that little bit of business. And the reason why is because, of course, the dollar bid that's coming in means that this market in the short term, remember the macro in this gold is a buy trade. But that means that there's a lot of buyers in here. That means there is going to be squeezes. And that's what we've seen twice already on gold so far, is the gold price squeezing again because of the dollar catching a bid at this stage. And that's exactly what you'd expect. That's why you can't chase this. This is why I can't, for example, trade the gold price here. I can only trade the gold price in these kind of locations up here, right? I can't chase this when the dollar's got a short-term buyer in it. So the only place I can do business is wait for the dollar to calm the heck down, hit a price level that I'm interested in, and then at that stage I can start leaning against perhaps a little bit of order flow that I can take advantage of and catch. Now, I did take another buy trade. I took a buy trade at 81.1s. It rallied to 99.6. I made another $150 and another scratch trade. So that was another profitable trade outcome that I had on the gold market. And that's been two trades I've had so far in this bit of business. The dollar has caught a strong bid behind that, and I'm looking at the dollar as a key price level as well at the moment. And I think that's going to cause the dollar just to have a little bit of a think about where they're at just now. And for that reason, I'm going to be looking for the dollar just down ticking a little bit. And that's going to leave us with this macro opportunity again. Remember, this is a fade. As a fade, you might not want to do it because it's against the idea of interns. But I certainly wouldn't be an intern trader either with the dollar narrative. If I'm going to be an intern, I'd be an intern seller, right? If I'd be an intern, I'd be an intern seller because the lower low and the lower highs would make me an intern seller. So based on that storyline, I do have some long gold at the moment, and it has just turned back round again. So I am going to try and take a little bit of profit at 97.3s. That's 3 out of 3 winners. I've just been successful. That's 3 out of 3 winners I've now got on this gold trade. And again, I've got another stop at break even. And it doesn't get any easier than that, guys. It does not get any easier than that. So very, very happy with that little trade outcome. I'm not saying you can't fade a market, guys. What I'm saying is if you're going to fade it properly. Don't fade it like a retail trader. Fade it properly. If you fade it properly, then you're looking at the right trades. But if you're not fading, put your buy stop against the lean. Put your buy stop against the lean and take advantage of it. I still quite like this, but the liquidity is getting so thick that I think they're going to be going into Gamesville at the moment, because obviously this is the NYMEX Open, of course, so you're expecting to have games at the NYMEX Open, aren't you? So overall, I quite like this gold as a buy trade, as a fade, but it's going to take a bit of work because of the thick liquidity. There we go. There we go. I've just been buying up gold at the bottom edge there at 96.4s and 96.5s. It's just sprinted up to 97.5s, and it's just given me another $100 profit. I'm going to put my little stops in at break even in this little bit of business. And that's us. We're in another buy trade. 3 out of 3 now. 3 out of 3. And you can see exactly why, exactly what, exactly where, exactly when. We did all this business in this area here. You can see the dollar kind of hit into this area here, which is what I was looking at for the dollar possibly to reverse against real yields. It hasn't, which is a bit of a pity. But obviously with the dollar just getting its way through that price, we can obviously start to understand that that's going to put another squeeze onto the gold. And that means we're going to have to buy again into the lower prints, again into the gold print. And I don't mind doing that because I made money on 3 occasions now. The more it wants to do that for us, the better I'm going to enjoy the trade, to be honest. It just means that you have to do a bit more work. Just means you have to do a bit more work. So I really like this at the moment. This could be an interesting trade for this afternoon's business, guys.